The question is, what next for Reliance itself? We have Jal Irani, who's been, of course, tracking the oil and gas space for a long, long time. He's executive director at Nuvama. Jal, great to have you on the show as always. Now, I was just going through your note, and you folks have a really optimistic view. I think your target is 3,205, if I'm not mistaken. So tell us, I mean, I remember I'd started my career back in 2005, and I was trying to remember this unlocking that happened with Reliance back then. So I'm so glad you brought that up in your note. Just remind us, what happened then, and what anticipation can one really go with respect to all the unlocking that perhaps is going to happen, maybe even retail and obviously financial services tomorrow.
So going back into history, in 2005, 2006, you had effectively all these companies, from memory, 4 companies getting demerged from Reliance Industries. And what happened at that stage is that when Reliance Industries went X of these companies, the Reliance Industries stock didn't fall, in fact, went up further. And then you got all these 4 companies for in addition to that, which was a value add of some 36%. At that stage, of course, the companies being demerged were very large. In this case, it's not as large, but to that effect, this is in the region of about 4 to 6% demerger in terms of a stock price. So if history suggests that if you have a similar move, you could actually get Reliance Industries post demerger not trading down meaningfully at least, and then you got the financial services business there, which in our opinion should fundamentally quote somewhere between 120 to 180 rupees a share. Of course, speculatively it could be anything, especially initially.
Jal, morning. So talking about the financial services business, right now it's purely being valued on the treasury shares of Reliance that it owns. It's not done business per se. But if you have to look and price Reliance Industries' financial business over the next 2 years, what kind of business do you anticipate and what kind of target price would you ascribe to the financial services business? What's the kind of growth trajectory the analyst community is looking at?
So see, Reliance in all businesses tends to be unique to create value addition at especially a mass market level scale. Now, and basically to that extent, full horizontal vertical integration. So having said that, how does that same thing apply to this business? Where it's going to be unique is that it is looking at mainly a digital platform to reach out to customers, and that business is it believes is hugely underpenetrated. Also, it is going to leverage the existing backbone of it's developed with its consumers, merchants, etc. So an existing database, if you may call it so. The market that it is targeting is predominantly retail and small businesses focused products, which it believes is hugely underpenetrated. So across the board, if you go back to history, whether it's petrochemicals, whether it is the digital business, it's actually democratized the business dramatically and brought down cost dramatically, made it very affordable to the masses. And we believe that it's a similar strategy that it's going to follow, in this case, digital delivery of financial products to effectively to 1.4 billion consumers. Effectively, the entire country is what their plan is. Now, frankly, valuing this business is too premature. They barely started. And they've not even really started a bulk of these businesses, right? So it's too premature. And as we have seen for the core retail business, it is the core retail business has taken more than 15 years since they launched. In fact, I think 16 or maybe 17 years since they launched. And it took all of, much more than a decade to even stabilize. And in fact, so that's a consumer-facing business. This is going to be consumer-facing business as well. So in my opinion, the runway is going to be very long. Is the market going to prematurely give significant valuations? You may get some speculation initially, but then if you use, the Jio digital business as any measure of when the valuations come in, it's actually only until a few years back, the market was actually ascribing a negative value to the Jio digital business. And only once they actually started getting customers on board meaningfully that the market started ascribing value. So at the cost of reputation, you may get valuation beyond the Reliance Industries shares that this company holds speculatively. But fundamentally, I think it's a very long way away from ascribing a very significant value.
Okay, got that. You were mentioning how earlier in 2005 when the demerger just happened, that time the stock went up even more. Can you tell us what you expect this time in terms of just the kind of immediate reaction we can expect? I'm asking you if there's sort of an opportunity to play this ahead of the merger.
So look, I don't trade. I'm not a trading guy. You should ask this question to somebody who's a trader. Okay, I fundamentally analyze things, and to that extent, I already told you the value of Jio Financial Services should be somewhere in the region of 120 to 180 rupees a share.
Jal, let's talk about which engine is going to fire the most. And I'm now going back to your target price of 3,205, which is, I think, the immediate target that you folks have. Oil and gas, what is the expectation? Because I think you're pretty bullish on that part of the business as well. Could it be more retail as we go forward? Because, I mean, there was an event even earlier, right? They were buying out some of the unlisted shares that are trading in the unlisted markets. And again, there was some excitement that maybe that will be the next leg of unlocking. But let's just take it part by part and get your sense on which engine you think, at least in the next 12 months, will be firing the best for Reliance Industries.
Hey, if you look at the four businesses, basically O2C, gas, retail, and digital.
Telecom, yeah.
Essentially, about 73% of Reliance's net profit comes from the O2C business, that's refining and petrochemicals and gas. So this is at the net profit level, not at the EBITDA level. The EBITDA level is misleading because at the net profit level, you also have to, account for minority shareholder interest. And do remember that 35% of retail is already given out. 15% of retail and 36% of Jio Digital has been given out. So by far, 3/4 of Reliance Industries will remain as O2C and gas. Now, this year, predominantly, gas is going to be a phenomenal business. In fact, gas profits within 3 years of Reliance restarting that business, the EBITDA of that business is going to equal nearly the retail business, which has actually now been a 16 to 17-year business. So that's going to be really firing on all cylinders, the gas business this year.
Okay, so just in terms of margins, O2C as well as gas, are you penciling in significant margin expansion as well? How should we sort of measure the expected improvement in profitability, both in O2C and specifically in gas? And also refining. I mean, just throw in a word also on the refining business in terms of just margins and how you see them trending.
So gas is predominantly a fixed cost business, and their volumes are going to increase. There'll be some proportionate increase of fixed costs, but not as much. As well as their pricing, they're going to get very healthy pricing this year. So therefore, the margins there will improve dramatically. Notably, even when prices are down, it's a fundamentally very strong profit, highly profitable business. But this year is going to be exceptionally good. Where O2C is concerned, refining sort of dominates in the O2C business. And the two between refining and petrochemical generally tend to be counter-cyclical. But refining, which is the larger of the two, generally speaking, had a phenomenal year last year. Right, gross refining margins as Singapore complex were all-time highs. Gross refining margins, Singapore complex typically should be in the region of $5 to $6. They were in excess of $20. So we're talking about an extremely high base on which now refining margins have taken a beating, and even if they normalize, you're going to see profits lower to that extent, which will be partly buffered by windfall tax going away. So that should help. And the input for or essentially with ethane prices coming down, the input for petrochemical prices have crashed, and the petrochemical business should sort of do better. So to that extent, O2C of a very high base should be somewhat lower, but not very low. In the longer term, the refining business is a great business to be in.
Jal, thank you very much for joining in, and look forward to your insights when Reliance Industries reports numbers on Friday evening. Get into